Okay guys, what we're going to do on this video is I'm going to show you exactly how, if you still have bad credit, what you can do in order to still go ahead and be able to buy a house. So a lot of people think that if your credit is bad that you just will not be able to go ahead and buy a house. You cannot do anything, but I can tell you that that is definitely not the case. So what I have with me is I actually have a credit counselor with me, and that is going to be the main person that you're going to have to be in contact with in order to go ahead and get your credit raised so that you can actually go ahead and buy a house, buy a car, and get the best interest rates that you possibly can. So she is definitely a credit counselor, and that's what you need to have on your team. That is definitely what you need to have on your team in order to go ahead and raise your credit. So what does your credit need to be in order to go ahead and to get a loan? What is the lowest that a lender will go ahead and take in order to go ahead and get a loan? What does my credit need to be in order to get a loan?
I would say for most lenders out there, you're looking at a 640 middle score.
Okay, so there's really no programs out there that you can get a loan. Can you get a loan under a 640?
There are some lenders that will allow for a score under a 640.
Okay.
The Rural Development Loan, also known as RD in some areas, will allow you to be at 620 to move forward. FHA does not, in and of themselves, does not have a credit limit, but the lenders establish what that limit is. So you might run into lenders that would do a 620 or lower. You hear every once in a while where lenders will say if you have a 580 they can get a loan. Most likely that's not going to be the case, because you'll go through and have lots of difficulties throughout the process.
Okay, so stop right there. And if people that are watching this video are having confusion with the 640 score and if that's good, if it's bad, or whatever, can you talk a little bit about on kind of the lowest credit score and then what the highest credit score is, and then kind of where a 640 ranks in between all that stuff?
Very good. I would say that it used to be in the past where if we saw a 600 credit score, that was considered a good credit score. Now a 640 is what we would call fair. It's where we would look at you now for a loan, but not necessarily you're going to get it just because you have a 640. We're going to look in detail what's on your credit report to see if you qualify. What a good credit score is now is a 720.
What's the highest credit score you can possibly have?
850.
So an 850 is the highest you can possibly have, and the lowest is
350.
350. So 350 is the lowest credit score that you can possibly have, and 850 is as high as you can possibly have. So kind of a 640 is kind of almost right in the middle.
Yeah, and that's why they consider it fair, and it allows you to then apply for and possibly get a mortgage loan. Okay. Although I think there's a lot of confusion out in the world that if you have a 640, you automatically get the loan. I hear clients all the time say, well, I have a 640, I have a 640. And that doesn't necessarily mean you get the loan. That means that you're they're going to look at you for a loan, but they're going to look at what's on the credit report.
Okay, that's actually good information to know, because I didn't even know that.
Yeah, and a lot of people don't.
Okay.
I have real estate agents and other people call me all the time and they say, well, they have a 640, why can't they get a loan? And we're looking at details on their loan, whether or not they have judgments or liens or maybe huge charge-offs. Anything over $1,500 is a major issue in the lending world, even if it's medical. And a lot of times people will say, well, if it's medical, it's no big deal. It could be a big deal if it's a large medical.
Okay. So say my credit's bad and everything, what do I need to do in order to, first of all, I got to find a great credit counselor. That's the first thing that I need to do in order to go ahead and fix my credit. But what am I going to have to give this credit counselor? Am I going to have to give them a birth certificate, or what am I going to have to give them in order to go ahead and raise my credit? Am I going to have to, give them my firstborn? What do I have to give them?
Well, first I'd like to kind of backtrack to what you said about finding a good credit counselor. And I think that's the most important part, because there's a lot of quote-unquote credit repair companies out there in which might dispute things off your credit report, but that's really all they're doing, is disputing stuff, whether it's valid or invalid. They're just trying to remove as much as they can to get that higher score, which is what I call fake results, because you didn't really do anything and all those items will come back on your credit.
Okay, so say that one more time. So most credit counseling services, they'll go ahead and remove stuff, but then there's a possibility that it could come back?
Yeah.
And how is that?
If it's a valid debt, let's say for instance you owe me $10,000,
okay,
and this credit repair company goes and they dispute it and dispute it and dispute it, And because I didn't respond in a timely manner, because
Gotcha.
maybe I'm too busy to, or whatever the case is, then the credit bureaus will remove that debt from the credit report. Well, here I come again on my normal reporting time, and I report that debt to the credit bureau again.
Whenever you have time to actually do it.
Right.
So it gets removed from my credit, and then whenever you actually have time to respond to all the lawsuit or whatever, then you actually do so, and then it goes right back on my
Right back
credit.
on. Mm-hmm.
So the key, I guess, would be to go ahead and make a settlement, to do some type of settlement to
Sure.
where, and actually probably get something in writing,
Yes.
I would assume,
Oh,
so that
absolutely.
nothing can come back on me, so that if my credit gets fixed, then all of a sudden they can't come back and actually do that. So you would want to go ahead and get everything in writing, and make sure that does not come back. So go ahead and continue with a good credit person.
If they are doing their job correctly, they're going to talk to you about what's on your credit report. They either will be able to obtain a credit report for you, or they will ask you to get your own, and sometimes that's going through annual free credit reports and getting the 3 free credit reports if you haven't done so already. It may be where you went and applied for a mortgage somewhere and you have a credit report that you can share with the credit counselor, and they're going to mull over that in detail with you over the phone of what they can do to help you. I would say be leery if they're just saying we're going to dispute this, we're going to dispute this, we're going to dispute this. Now that's part of the process, but it's not to avoid the situation. It's to get clarification and to know how to put a plan together to resolve the issues.
Okay.
But sometimes that may entail that there are settlements that need to be done. Sometimes things get deleted because they're so old that they shouldn't be reported any longer. It doesn't mean that you don't owe the debt. Obviously, if it's a large amount and it's not reporting because it's 7 years, or if we get it off because they're reporting a trade line that shouldn't be on there because it's past 7 years, it doesn't mean you don't owe it. In the state of Ohio, for instance, it's a 15-year.
Can you explain what a trade line is real quick?
Trade line would be an account that's reporting on your credit report, whether that's maybe a credit card that you've had, or it could be a collection, anything that's reporting on your credit report.
So if I have 3 credit cards, then that would technically be 3 trade lines.
Correct.
And about how many trade lines does a lender look for? Is there a minimum number of trade lines that I have to have in order to get a loan?
For most lenders, there are. Yes.
Okay, and how many is that?
3.
So I have to have, 3 good trade lines.
3 good trade lines. Correct.
So 3 good credit card trade lines, meaning that I have paid them in order to go ahead and get a loan. So,
yes.
okay.
So typically most lenders require 3 open and active trade lines. So it's not 3 trade lines and one of them's closed. It'd be 3 open and active that you've had for at least 12 months. That's typically what I see lenders do. Now there are some lenders that don't require that, but for most parts that's what you want to have. That's kind of the perfect pie of credit too, having 2 installment loans and 2 credit cards or revolving accounts. And installment loans are such as a car or anything that you have a set payment every month at the same date. Where in a revolving account, it could be different payments depending on your balance, and kind of rotates a little bit throughout the month of when the due date is.
Okay.
So they look at those characteristics in creating your credit score to see, can you handle those 2 types of accounts, because they're very different.
Okay, so basically, when your credit is bad, really honestly, based upon what I just gathered, was that a credit counselor, a good credit counselor, is actually going to settle with your creditors, which will basically be raising your credit score.
Yes.
So that's the magic word, is to get them to settle on all of your stuff.
Correct. Yeah, a lot of people think that because they have a bad debt, and let's say your bad debt, it's a charge-off credit card for $5,000, they think that they're going to raise their score by paying it in full rather than doing a settlement. And a lot of collection companies will say that, well, if you pay it in full, it'll help your credit, because if you settle it, it's going to say settle less than full. It doesn't matter which way you do it. You can pay it in full or settle it. I suggest settling it so you can keep money in your pocket. But as far as credit score, it's not going to make a difference one way or the other.
So if I have settling, basically means that they're going to settle. They're going to go ahead and settle. Chances are they're going to take less than what is owed. Correct?
Yes.
So I know that you can't give a really a very accurate number on exactly what it is, but say I owe $10,000 on a credit card or whatever. You just do an easy number. Say I owe $1,000 on a credit card. What possibly would they settle for in order to go ahead and clean this up and basically forgive me for that? What would, percentage wise?
That really depends on where your account is in standing and how long it's been there. So I'll give you an example. If you owed a credit card company, I won't throw names out, but let's say you owed a credit card company, they still have it in their department trying to collect on it, and you owe them $1,000. They might settle for 20% off, so you're going to pay $800. If you wait a couple weeks and allow them to sell that for servicing to a collection company, you might settle that newer account 50% off. If it's an older account, let's say you got a year left and it's going to fall off your credit, that's what I call the sweet spot, because it's not a judgment yet. It probably will become a judgment, but it's not a judgment yet, and the collection company wants to get whatever they can for it because they bought it at a very small price anyway.
When basically what she's saying is that whenever, and I'll go ahead and throw names out there. So say you go ahead and have a credit card with Chase or something to that effect, American Express or somebody like that. And basically what will happen is that you'll start getting probably, I guess they'd call you or something.
Mm-hmm.
So say you got an American Express credit card, and all of a sudden American Express is calling you, and then basically you're getting phone calls, but it's not from American Express anymore, but it's still tied to that account, correct?
Right.
So basically what had happened there was American Express sold that debt to whoever's calling you, whoever that company is. They sold that debt to them. So chances are that that person that bought that debt off American Express, they bought that on just pennies on the dollar, correct?
Mm-hmm.
So maybe $1,000 loan or $1,000 credit card, they could have bought for $50, $100, something like that. But that credit card, they're probably still, whoever bought that bad debt, they're probably still going to come at you and try to get the full amount.
Yeah.
Because they're going to try to, they bought it for $100. They're going to try to go ahead and make money off that and still get you to pay that $1,000. So, but that's where they bought it for $100, and that's where a good credit counselor can go through and negotiate that debt for you, so that you don't have to pay $1,000, so that maybe you can settle that for $300 versus $1,000. So you technically owed them $1,000. You settled for $300, so that's 70% off.
Correct.
Did I get every bit of that correct?
Yeah. Except that when Chase sells it first, they sell it for servicing. So basically, Chase still owns the account and they get to make all the rules, but they're going to still settle it at a discount. But this other company is servicing it for Chase. Well, then what happens is then it eventually gets sold. And when it gets sold, that's when it's the sweet spot, because they bought it from Chase. Now, Chase is no longer involved.
Which is what I was just talking about.
Yes.
Is what you call a sweet spot.
Yes,
Okay.
Exactly.
And they buy those things for cheap.
Yeah.
They buy them for cheap, and that's how you can settle your debt for $1,000, and you can settle for $300, and it's good for you, and it's actually good for everybody except for American Express or whatever. But they just have to write off their losses and move on. So typically you don't really have a number of what that would be. Is it normally around 30% that they?
When you get to that sweet spot, yeah, it could be 30%. I did one not too long ago. The person owed $11,700, and we settled it for $1,700.
So I guess it just kind of depends on if they have sold it, kind of how long this bad debt has been on their books. Mm-hmm. So I guess it just takes it case by case then.
Yeah, it is very case by case, yes.
Is it possible that if you have bad debt, and I just came into some money, and I go ahead and just want to pay off all my bad debt, is it possible to go ahead and lower my credit score by paying my debt?
Yes, unfortunately, I don't recommend that.
Okay.
You definitely want to speak to a credit counselor, really know what you're doing before you do that. Just because you have a bunch of money and you want to go pay off your debt is not and your goal is to improve your credit score, it's not necessarily what's going to happen.
So what she's saying is that if you have debt, if you have $10,000 in debt, and say something happens, you hit the lottery, or you inherit money or something like that, and you want to go ahead and clear up that $10,000, you might want to talk to a credit counselor first, because if you just go ahead and stroke a check for $10,000, your credit score is probably going to go down from that, correct?
Yes.
You would think that your credit score would go up because you cleared your debt up, right? Well, that's not true. And do you know why that's not true?
Yeah, there's a couple reasons. If it's an old negative account and you go and pay it, then you reaffirm that debt, basically. It's now reporting a newer date. So let's say the last time that collection was reported to your credit report was back in 2006. and you pay it today, so now it's reporting that you paid it in 2012. So you've actually made that a new focus on your credit report, where it was before not that much contributing to the calculation of your credit score. So if you do want to settle an old debt, you need to request for a removal of that debt. And some creditors or collection companies will do that, and some won't.
Okay.
But if it's a case where it's an old debt and they're not willing to remove it from your credit report, you should definitely, if you're able to, just not pay it until it falls off, and then go and pay it. And that would be the best way to do it
Okay.
at that point.
So definitely you would want to talk to a credit counselor on that before you paid anything off, to see kind of where that's at, so that you don't lower your credit score, because you would think that that would go ahead and raise it, but it doesn't. So you definitely want to go ahead and watch that.
Right, and just another point that I think is very important, a lot of people don't understand, is let's say you go to call those collection companies that you owe money to back in 2006, and you don't really have the money to pay it, but you're getting all these phone calls, so you're going to go ahead and talk to them and try to set up some kind of payment plan. Once you admit fault on the telephone, verbally or in writing, that you are responsible for that debt, you have restarted the statute of limitations on that debt. So I recommend, basically what that means is, for instance, the state of Ohio statute of limitations.
That is some serious geek speak.
Yes, okay, sorry. Statute of limitations in the state of Ohio is 15 years for any written contracts. So if today you owed me $1,500, and I've been trying to collect from you, and I haven't been able to over and over and over again. After 15 years, I can no longer collect from you. I can't harm you. I can still ask you for the money after 15 years, but I can't do anything to harm you. I can't file a judgment against you. I can't do anything because statute of limitations on that debt is up. But if today, it's been almost 15 years, it's like 14 years or something, and you call me up, or maybe it's only been 3 years, you call me up, and you say, yeah, I owe that debt, let me see what I can do to make this right, and you don't make it right with me, well, you've already restarted the statute of limitations.
Gotcha.
So if it was 1 year from being where I can't harm you, now I got another 15 years.
Wow.
Because you verbally admitted fault to that debt.
Wow. So just keep your mouth shut.
Yeah, even if you're going to pay it or make payment arrangements. What I do with my clients, let's say they can't settle the debt in full, and they're going to make payment arrangements, which I try to steer against that. But let's say they have to for whatever reason. Then one of the things I do on the telephone is I just want to make a verbal statement that we are not admitting fault on this debt. We are just tired of being harassed. And that's pretty much how we handle it, because then they can't restart the statute of limitations, and if my client fails to make the payments as agreed upon with the institution, then they might have to restart that again, but at least they don't have another 15 years tacked on to being able to collect.
Really good information to know for sure. I'm learning a ton of stuff here. So basically, can you talk a little bit about Quizzle.com, what it does, and basically how do I find out what my credit score is without it hurting me? Because if you check your credit, it can actually make your score go down, correct?
If you have a credit institution check your credit, then it'll make your credit score go down because you're seeking credit. Okay. So anytime you go anywhere and you're seeking credit, whether maybe you come to me for a mortgage and you don't really want a mortgage, you just want to look at your credit. First of all, you shouldn't do that, but that would hurt your score. But you could go to Quizzle.com, which I'll say I do not own that site. I don't have any affiliations with Quizzle.com, but it is a consumer website that a lot of consumers use to get a free credit report and score based on Experian. And that is what we call a soft pull. It doesn't hurt you because you as a consumer are just looking and inquiring about your own credit status, and it's highly recommended that you do that, whether it's through Quizzle or any other means. You got those places like freecreditscore.com. I don't like those personally because you're going to end up paying a fee for them, but Quizzle's entirely free. You get to use that service every 6 months for a free update on your credit report. And they do have a credit monitoring system you can also purchase through that website. I think it's like $7.95 or something of that. And then there's other resources like creditkarma.com, which doesn't give you a full credit report, but it gives you a TransUnion-based credit score. And it also is a free credit monitoring. So you can get that free credit monitoring too. You don't have to pay for that service, which I think is very nice to have those resources that you can keep the money in your pocket. Okay. But Credit Karma will actually email you if something happens on your credit, and that's free.
Okay. So it's just basically a place to go ahead and get your credit score basically for free that does not hurt your score. So it's not going to go ahead and hurt your score because she said it was a soft pull. If you go through a regular institute, then it's called a hard pull, which will go ahead and actually bring your credit down because you are seeking credit. Makes a lot of sense, doesn't it? So you want to make sure that it's a soft pull, and definitely Quizle.com is that. It's QUIZZLE.com. So basically, kind of being a credit counselor and doing it for as many years as you have, how long, I mean, just kind of on average, credit is bad, I come to you. How long does it take to fix, your average person?
My average person takes about 3 months. So,
Okay.
And I think that shocks a lot of people when they look at their credit and they think they're never going to get anywhere. But it's usually about 3 months. Usually they're easy fixes. I think the longer clients are the ones who have huge amounts of debt that we have to settle, and it's just coming up with the funds to be able to do that.
But also, it probably kind of dictates on how well they actually get you information too, though, correct?
Absolutely.
Because if
yeah.
I'm just, going to go get my credit higher through a credit counselor and I just drag my feet, they can't get a hold of me and all this and that, obviously the process is going to take longer.
Yes, and we have some people that they're not goal driven. Maybe they haven't, I would like to buy a house or something like that, but they're not really goal driven to buy that house. They're not really aimed at doing that in a specific time, and they might drag their feet on getting some things that we need to do our job. For instance, if we have to dispute something or get something removed because we settled it or something of that nature, we need you to supply, or the client to supply the updated credit reports to us, because they don't mail them to us. Sometimes they do because of the system that we use to update their credit. Sometimes we'll get them in the mail, but we don't always get them.
Okay. So I go through the whole process, my credit gets fixed and everything. Do you have any words of wisdom for me actually maintaining my credit score? So I've already got a home loan and everything. Do you have any I guess just words of wisdom of what I could do to maintain it so that I don't go back and I don't have to go through all this process again, so that I can live my life and breathe a little bit? I mean,
absolutely. First, I would like to say that if you have a good credit counselor, they're going to educate you of why you were in the situation you were in the first place. And sometimes you might know it. You might have lost your job. But even still, if we have the excuse that we lost our job and this caused credit issues, there's an underlying reason of why that caused credit issues. We didn't have an emergency savings account. So we look at all those different things of why this situation happened to help them start building that emergency savings account.
What emergency savings account? Really good thing to know. How much do you should you put out of your paycheck a certain percentage into an emergency savings account, or what should you put into that? How much?
The biggest rule of thumb that most people will tell you is 10% of your income.
Okay.
However, I find that when people say tithe 10%, a lot of people have trouble with that. 10% is well, what am I going to do to pay this bill or that bill? So what I do with my clients is we look at realistically, let's get into the habit of saving first before we make a number of how much you should save. So some of my clients, it might be $25 a month just to get in the habit of having that removed. I recommend that it get removed from your check, opposed to you getting your check in your or cashing your check or getting an auto deposit into your bank account and then having to take that money and transfer it to savings.
Because the chances are you probably just won't do it.
Yeah, because then you find a reason why you have to have it. But if it's already transferred, it's kind of, you forget about it. I also recommend that it go into a money market account rather than a savings account, because I don't know what it is about our culture, but a savings account is just an extension of our checking account anymore. But when you say money market account, it has a different feel to it, even though it's in essence the same thing. You do have a little bit of limitability on accessing your funds with a money market account. But
do you make interest on that?
You do, and usually a higher interest on a money market account than your traditional savings. So.
What do you see people? I mean, because I have even a lot of friends that they want to put all their money in savings, and I can't tell you what to put your money in, what not to put your money in. But what's the interest rate on a savings account? It's really low.
If you're lucky, 1%.
Yeah,
it's very low.
It's really low, because I have a savings account myself, and I don't keep really hardly any money into it because, I just don't make any money off that. I mean, it's just that simple. So money market account.
You make a little bit more on a money market, but it's still in this time it's still very small. What I recommend is people start doing that, and as they feel comfortable, then take those funds and put them in a CD or something like that. But getting into the motion of saving first is the most important, and then a lot of people are like they want it liquid. So getting a CD, that means they kind of have it tied away for a while, and that's really hard on them.
So the biggest thing that she's basically saying is that, you just got to get into the habit of actually saving. Whether it's $10 a month or $10 a week or however much, you just have to get into the habit of saving. And it's really key to get into that habit. And just like she said, you should definitely probably go ahead and get that taken right out of your check right from the start, so that you don't actually have the need to actually go ahead and spend it. Because chances are, if you have cash with you or if you have money on you, you're probably going to spend that money.
Yeah.
I mean, you just got to get into that habit of saving. So I got a lot of education out of this. I know everybody watching the video did as well. So definitely appreciate it. And if you guys have any questions about anything, all you got to do is go to your realtor, and they'll get back to you as soon as possible. So thanks for watching the video. I hope you got a lot out of it.